All right, well, thank you, Scott. Great information, great intel from your experience, so quite a few hacks to glean from there. So my name is Mackenzie Thompkins. I'm a senior relationship manager with Bank of America. I manage a portfolio of commercial clients providing financial solutions to help their company succeed. So I'm thankful here. We've got a really great panel of really broad ranges of experience from the legal side, from the finance side. So I want to go ahead and just give the both of you an opportunity to introduce yourself. So Eden, I'll go start with you.
Great. Hey everyone, can you hear me? Yeah. All right, well, thanks for having me. I'm really excited to be here with you. I think it's working.
Yeah, give it 1 second.
Okay. This is not working. Thank you.
You're left. You flipped it off.
Okay, that's better. Yeah. So hey everyone, I'm Eden Doniger. Happy to be here with you. I am a general counsel and chief compliance officer for tech companies. I actually was recently with a company called Noba Technologies, a startup based in Miami that just closed. So interesting story there that I can talk to any of you about afterwards, and I'm in the process of looking for my next position. But having been through that experience as a lawyer has been fascinating, helped wind down a company and start a company. Before that, I was at a company in Atlanta called BitPay, which is one of the oldest cryptocurrency companies in the world. It's a payments company based in Alpharetta. And I was their general counsel and chief compliance officer for a few years. But I think what I wanted to mention really quickly before we move to Will's background is that most of my career I was in law firms, and I worked at Cox Enterprises for a very long time as in-house counsel. And those experiences really formed me as a lawyer and gave me incredible experiences, but I did reach a point where I had this itch, you know, to do something completely different and an entrepreneurial spirit. And it was very hard to break out of the world I was in because I was so entrenched in it. To make that kind of a change is a really big deal, and it's hard to do it. And my transition out of that was really getting involved with Techstars and becoming a mentor for them for 1 year, which was unusual. They'd never had a lawyer mentor. We were just talking about this before. They thought it was an unusual idea. And I had to pitch it and say, you know, I bet these startups and these founders could enjoy hearing from a lawyer. And I could see what are their issues and help them. And they said, let's give it a shot and see what happens. And it was a great experience for me, very eye-opening, but also a great experience for them. They were really excited to have a lawyer to talk to, all these founders. And that was what sort of solidified for me that this was the right fit for me in my career. At this point, I was like almost 20 years into being a lawyer when I was like, this is what I want to do. And had to figure out then what to do next, and the BitPay thing came along. I knew nothing about crypto at all. I knew nothing about financial payments. I knew nothing about small company life. Everything was different, which was what made it great and why I wanted to do it. So now I'm on this journey, and I don't look back anymore at corporate life as something that I need or want anymore, right? It was perfect for me for a while, and now it's all about the entrepreneurial tech company world that I'm steeped in that I love. So I'll get more into the hacks that have come out of that in a minute, but turn it over to Will.
Yeah, hi. Hi, everybody. My name's Will Massengill, and I really want to say I don't think I've been to a TiE meeting since about 2019. It's been a minute, and I got to say it's great to see some familiar faces, some people who have given me advice over years, who've been friends through a variety of journeys, and you know, it's great to see how it's grown. This is an incredible space, so I want to first start off and appreciate you guys for having us today. As I said, and as Mackenzie pointed out, my background is heavily finance. In my mind, I'm kind of perfectly divided between, you know, somebody who has an operating capacity and somebody with a capital markets focus. That's given me a pretty weird career trajectory, but also a pretty unique set of experiences that I think are very particular to entrepreneurship and growing and scaling companies. I've run an M&A team before for a couple years for a large healthcare company. That's where I got my first real exposure into the growth equity side of investing, control positions, minority equity positions. From there, I spent a few years in investment banking. Didn't love it, but certainly got the experience. And then from that point, I went on to be one of the first few employees at a local financial technology company called Hive Financial Systems. scaled that company, raised a good bit of capital, learned a lot. From there, I was the chief financial officer of a Bay Area company in IT and enterprise SaaS in the supply chain risk analytics space called Craft.co, where we led them through a couple of rounds of funding, some in a great market in 2021, some in a very challenging market in October of 2022. And most recently, about 6 months ago, I came on board to a local fintech company called Relay Payments. And we do fly a bit under the radar, but sneakily, Relay Payments is actually one of the largest early stage companies in Atlanta by market cap. We've raised to date over $160 million from a variety of, whom I would consider to be tier 1 institutional investors. And again, there's certainly a rhythm that comes to playing the capital markets game. It is unique by time, it's unique by industry and company type, and certainly by market. And I know that we'll get into that a little bit, but yeah, thank you very much for having me.
Well, thank you, thank you. So as we discuss growth hacks or tactics, it's important to really understand the legal and compliance ramifications associated with growth. So Eden, as you've already explained, you really have a broad range of experience, serving as a general counsel, chief compliance officer, both in-house and at large corporate firms. So first question for you is, why is it important to have a legal advisor on your team?
It's a great question because a lot of early growth stage companies, startups, et cetera, don't really think about having a lawyer as a priority. At most, they might think about outsourcing whatever legal needs pop up to a law firm. And they think, okay, I'll just find a good law firm. They'll be there for me. I'll send them work as I need them. And having had the experience of being in-house at both a more mature growth stage company and a brand new startup, my perspective is that it's actually critical to have legal counsel at the table with you from the start. That can be outside counsel. Maybe you don't have the budget yet to bring someone in-house, but ideally it's an in-house person who is your business partner. I was thinking about Scott's comment about the intersection of business and technology, and for me it's the intersection of business and law, right? It's a really symbiotic relationship. And if you hire the right lawyer who is entrepreneurial minded and has a lot of seniority and expertise, has seen a lot of things, right? Knows how to issue spot like this, right? You can just see stuff as the conversations unfold between whether it's engineers, product people, marketing, sales, whatever. That lawyer just figures it out as you go along. And if they're not there at the table with you, no one's spotting those issues. And those issues could be huge obstacles that you need to figure out how to get past, or they could be small things, but it's still worthy of discussion. The lawyer also, if they have the right mindset, is good at helping you figure out what is your risk tolerance, right? There are going to be a million risks, and some of them are fine, some of them are not so fine. How do you define your risk tolerance if you don't know what the risks really are, right? And so, people think about compliance and legal sometimes, I think, as being sort of the voice of, no, you really shouldn't do that. But in my opinion, it's really the voice of, let's find a way to do this so that you can do it. And if there are going to be risks and consequences, at least you know what they are, you're prepared for them, you can defend your position if you have to. And if there's going to be reputational risk, financial risk, regulatory risk, you're ready for that, right? And it could be disastrous, but you know what it is, right? And so to me, like when I was at the startup I've just been at, I was the 4th hire, and that's unheard of for a financial payments company. I was hired right after the head of product. And they just looked at it as, you're as important to what we're trying to do as the head of product, which I thought was just really unusual to think about it that way. Not every company is going to view it that way. We were in a kind of regulatory space that's got a lot of risk to it. The other thing I would just add is, that I think is really important to think about, is there's going to be hot topics that are going to change over time, right? So you may think your legal risk and compliance risk is certain stuff at that moment. That could change 2 months later. And if you're not ready for shifting those priorities because you don't have the lawyer involved in those discussions, you're going to have so many blind spots. And I just heard a story earlier at the cocktail hour about a company that, had the great idea and was moving forward quickly and everything was wonderful, and they didn't have a lawyer advise them, and there was something they completely missed and it killed their business. So, I mean, those are the things that can happen.
Thank you. Thank you. So just shifting here, we all know that capital is required for any business to grow, and obviously you also have a pretty broad range background in the finance sector, M&A, investment banking, as a CFO. You also bring a unique perspective in having operating finance and capital markets background. So the first question for you is, how does a company successfully raise capital?
You could teach a semester-long course on that topic and not get all the way through it, so I'll try and keep it punchy. You know, in my mind, to boil it down to kind of a singular motif, I would say it's all about fit and coherence between your capital partner, between your business, and between you as the founder. You know, from the capital point of view, I think I was talking to somebody a bit earlier. People see institutional venture capital is kind of the end-all, be-all growth activation capital. It's the marquee factor when it comes to success. And that's not true. It's a very specific asset class that fits a very specific type of business. I will be using the word specific a lot. Quick question, has anybody ever heard the phrase T2D3? So I saw a flinch. So in VC circles, this means triple, triple, double, double, double. That's the expectation when you have these conversations, is for you to fit their box, you have to have a certain growth trajectory. There are certain product and pricing capabilities that you have to have. It is a very specific fit. Now, there is a million different types of business models that have a million types of growth trajectories and exits that will fly far past a venture capital funded company. Can you find that fit? A hospitality deal that was done locally, the type of capital required made the most sense for us to very intentionally go out and target high net worth individuals, family offices. We created an equity structure that allowed that flexibility, provided them that financial return, but also maintained the degree of control that the owner needed in the business. There was a local marketing tech company who was looking to raise venture dollars for advertising spend. We reviewed the data, and they have a very, very predictable ad spend to customer acquisition channel. So we thought, is that worth venture equity? Especially if it's seasonal. We went and secured some venture debt, deployed it in Q3, it paid back in Q4. They raised a venture round the next year at a 15x multiple of where they would have been the year prior. So understanding your business, your capital needs, and having that be your target audience is absolutely paramount. Cannot stress that enough. The second piece is planning. Know your stuff, do your homework. You need to have coherence between what you're telling people, your investors, and the supporting materials. Critically important. Does the financial model match the deck, match what's coming out of your mouth? They're going to know if you haven't focused, and you know, you'd be shocked at how many conversations, pitches you see where people come in underbaked, and it is not great. The third factor is you. What do you require? What are your preferences? Is this a scale and exit business? Is this a lifestyle business? Can you work with the personalities involved? Can you handle that pressure? Are you willing to cede that degree of control? Every opportunity is unique, and we like to fit it in a box because it's really easy to do that, but it's important to know that this is your company, it is of you, it takes your personality, and you have to really understand it front to back in order to have the best outcome. You're talking about, you know, making mistakes that can kill your business. This is absolutely one of them. Picking the wrong partner, picking the wrong capital type of structure, it can upend you. It's a mistake that you can make that kills you 4 years later, and you've done everything right. So be intentional about that.
Thank you, Will. So Eden, back to you. When considering the legal parameters here, what should be the thought process of being proactive and strategic?
So I think there's a lot of examples where that comes into play. So let's say you have your lawyer at the table. I'm going to talk about it like an in-house lawyer for argument's sake, not an outside counsel person. But, you know, a company that wants to be very aggressive about sales, for example, how do they go about that in a way that how do they use their lawyer to make that better? So concrete examples, growth hacks would be, you know, you really should think about, like, what's your contracting strategy? How do you get people under contract quickly, right? What's the template you're using? How do you negotiate? You won't have much leverage probably, so you need to be ready to concede a lot of things. How does your lawyer help you with that? So a concrete example right there would be, if you have your lawyer in your sales funnel meetings every day, every week, whatever that looks like, hearing who's coming in, who's interested, what stage are they in, what are their concerns, that lawyer should be thinking about, okay, like, how can I make this contract work for this particular partner? Are there adjustments we should make? How quickly can we get under contract, right? How can I support these salespeople and marketing people as well? I found that relationship between sales and legal was huge, and salespeople aren't used to that. They don't know how to use lawyers, really. It's not something they're accustomed to, but the lawyer can help them figure out how to use the lawyer, and it becomes this huge support system for the sales team. I would say another example would be, how do you save money as you go through everything you're doing, which is probably music to Will's ears, is like, a good in-house lawyer is sitting right alongside the CFO thinking about that all the time, whether it's use of outside counsel and how to reduce that, or negotiating vendor contracts, or choosing your systems that you need to run your business. Without that lawyer sitting there, you're probably going to have some missed opportunities to save a lot of money. And a good experienced in-house lawyer is already thinking that way all the time, right? Not just the CFO. And then another point I just wanted to make was, when it comes to, this is kind of a boring topic when you think about it, but it's so important, which is like processes and documentation, right? So I think most companies, as you're hitting the ground running and you're flying, that's the last thing you really care about. Critical in fundraising, critical in regulatory situations, audits, examinations, whatever. But also, there's a lot of mistakes that can really bite you. So for example, if you're entering contracts all over the place and you're not documenting, like, when does it auto-renew? You're going to miss that deadline. You're going to have another year or more years of that contract that you did not necessarily want, that cost you a ton of money. You can't get out of it. You're stuck. I've seen that happen so many times, just because there was no, like, process around managing that. Or you've committed to things in your contracts with vendors that you totally forget about, and then they come back later and it's some awful term that you didn't want. I mean, you've probably seen this a million times.
It's selling the roadmap sometimes.
Right, exactly. So putting some discipline around those things early on might seem like annoying, but it's so important, and it helps so much a couple years later in many different contexts where you'd be grateful you did it. And I think that's where finance and legal work hand in hand together. There's just a few examples.
Awesome, awesome. So we're all aware of the environment we're in, rising interest rates, inflation is rampant. I'm sorry, excuse me. So what I was saying is, we're all aware of the environment we're in, rising interest rates, inflation is rampant. And so this question is for you, Will. When considering today's market conditions, I mean, would you say the timing is right to sell a company or even buy a company?
That's a complicated question. So to kind of break down the past 18 months, complete nonsense. Things are happening and they don't all make sense together. We've basically had a tech equities market collapse. Venture funding, especially when you get later stage, has completely fallen off a cliff. Valuations are down 14% across the board, up in financial services, down 43% for technology companies. All while 2022, biggest fund closure year from a dollar perspective ever. These are things that don't necessarily align. You had, interest rates increasing by orders of magnitude. I think prime rate today is like at 8.25. It's a very, very weird time. And, the negative stats are, year to date, M&A is down 44%. LBOs are down 55%. It's a challenging market right now. That being said, good deals are getting done. This is kind of a mini ice age, and the bottom third is falling offshore. But the good deals are indeed getting done. And I think when you look at where we are today and you try and forecast how the exit environment looks 18 months, 24 months from now, you've got some odd things happening. M&A activity is already returning to form, early in Q2. You've got a ton of dry powder sitting on the sidelines collecting dust from that 2022 fund closure. And you've got this massive wall of private equity dollars of fund maturity. You're going to see an uptick in secondaries, companies having to reinvest in their growth strategies. The transaction volume has to increase because these private equity funds, fund managers are not going to return their money to their LPs. They're going to burn the world down before that happens. And so the market is volatile. It's in a tight spot right now, but general consensus is that it will return. Now, is this a good time to sell the company? I will revert back to a previous point. That's up to you. It's a very personal decision in terms of what you need. If you don't think that market environment's favorable, favor selling right now, but you need to make a transition, put some structure into the deal. You can change the way the payout works. You can make it a little bit more variable and time sensitive, and you can create those protections for yourself. It's not just kind of a dust your hands and moonwalk out the door. There's a variety of shapes that these deals can take. So I think that while it does feel challenging from a macro population sample, there are opportunities, and so you always have to listen. I had an acquisition that blew up in my face on Monday. We are still interested, and the very next day, the CEO and I sat down and we said, all right, what's next? The buyers are buying, especially the ones who have cash.
Very interesting. Thank you. So, Will, you've also told us how a company can successfully raise capital. Eden, when a company is looking to raise capital or even maybe just launch a new product, at what point would you say legal advice is necessary?
So obviously I'm going to say as soon as possible. That's not a surprise. I was thinking about this has come up for me a lot, an interesting example. I like the part more about like launching a product, right? There's a lot of things that go into that decision, obviously. And one of the areas that I found is most fertile for discussion and involvement of the lawyer is jurisdictional expansion, right? And it could even be in the United States within certain states, not just necessarily other countries and regions. But in most industries that you're in, there's going to be a lot of thought and planning that needs to go into that. And I think the speed with which you want to do business and expand can sometimes be a little dangerous when it comes to whether like expanding into that place is the juice worth the squeeze, right? I mean, there can be so many considerations that have to be figured out first. So even looking at one country, when I was with Noba, we were looking at expanding into Latin America, but huge region, which country do you pick first and why? And what are all the regulatory obstacles, politics, how is business done? What are the cultural considerations? Things like that. There's so much to think about. And also just like the boring stuff of setting up like entities and all that stuff takes time and effort and you need to plan ahead. So I think if you don't have your lawyer there at the outset and you're getting all these great ideas and you're like, this is a great place for us to be. The market fit's great and there's interest, but your lawyer's not involved. None of those other questions are necessarily being addressed and plans being made accordingly so that you can say, all right, it's actually going to take us 6 months to get started there, even though we want to go right now. And maybe we can speed that up a little, but that's realistically things we have to plan for. And then that might change the entire strategy, right? So that's one example. Also, I just think that when it comes back to like sales and marketing and stuff like that, right? I've had a lot of instances where even just like little things like word choices, right? So you're putting out some interesting stuff into the public about what you're doing and when you're doing it. And I find that a lot of times like marketing and salespeople, brilliant creative people, they might pick a word they shouldn't have, and that word could have enormous significance in terms of what comes back to you. And it can be pretty risky. So most lawyers are good at that wordsmithing thing, right? And looking at something, and they can be quick and just say, okay, I love what you've done, you might want to change this one word, and here's why. And it's an easy fix, right? But that easy fix could save you a lot of money and pain and heartache. So, yeah.
You carry these, like we talk about saving costs explicitly, but I mean, the risk aversion is, companies don't think about entity strategy and risk management typically until something's fallen off. And by that point, you were carrying a lot of liability probably alongside of you.
Yeah, and I think it goes back to this idea of like, you don't know what you don't know, right? We were talking about that earlier, and that's okay, but that's why you have the lawyer there, right? And they might not know everything either, right? I don't know everything, but I may say there's something here, and there's a lawyer I know at this firm who's this is what they do, and I'm just going to check with them right now, and I can get them on the phone for you. You know, it's that kind of thing where it's like, it's all about that sort of like knowing what to look for and how to prepare yourself for what that means.
Thank you. So that's a good segue. Will, financially speaking, what would you consider some do's or don'ts for a company that is looking to grow?
So I've got some ideas that, you know, obviously apply in my role financially, but I think are great if you're in a sales and marketing position, executive position, product, just kind of general tenets to live by. The first being, be intentional. Know why you're doing something, know what success looks like. To the second point, be decisive, hold yourself accountable. If something's not working, cut it. Cut it now. There is a very big kind of sunk cost fallacy that you see in a lot of entrepreneurs because, as I am one of those people, you get a lot of your pride and your self-worth wrapped up in your decision-making. The company kind of becomes a degree of your identity. And you can't hold it like that. You have to understand what you're doing, why you're doing it, and if it's bad, you have to cleave it. It's critically important. The second is maintain focus. Keep the main thing the main thing. So many things pop up. Stuff is not always a good thing. Stuff feels good, you feel busy, but again, not all things are created equal. I've worked with a handful of companies, you know, one in New York, one locally, where they're a seed stage company and they have 6 products and they have 3 salespeople. Why are you doing that? Ambition is great and it's necessary. Ambition is a burn multiplier, and so you have to keep it in check. And again, the last thing, and it's something that Scott also pointed out, is understand who your network is and leverage it. You would be surprised who you have access to and the types of insights, learnings to have. Be humble about it, listen to everybody, but also be discerning because people give you bad advice all the time. That's one of the best things about Atlanta is you can get just about anybody on the phone if your heart's in the right place and if you're being genuine. So those are my to-dos. No to don'ts. Besides don't have too many products. That's bad.
Thank you. So any closing remarks from either Eden or Will?
I guess I would just say, you know, the theme for me is like, not just to have a lawyer in your pocket that you trust and can rely on, but pick the right person, right? So one cautionary tale I've heard a lot is, you know, people hire a lawyer who maybe isn't in the right area. You know, they have a law degree, they've practiced law, but their expertise might not be the right fit, or maybe you thought it was, and they really aren't helping your business grow. They really aren't meeting your executive team where they need to be. So be thoughtful when you go into this process of, if you're ready to hire an in-house counsel, or even pick an outside law firm, be really thoughtful, get some advice from people on what's the right fit, what should I be looking for, because ideally, especially if it's in-house, you're gonna want this person to be there for a long time as part of your executive team, integrated into everything. So you wanna pick, it's just like any other key hire. This is a very special partner to you, and they should have a lot of passion for what you do and for your mission, and be able to meet you where you are at all times. That's, I think, the best advice I can give is like, choose wisely.
And I think I'd say, and it's something related to what we were talking about a bit before, is, you know, companies go through life cycles. They change personalities every 18 some odd months. That's a guess. It's important that you, as a founder, as a member of that first team, to grow with it, understand what you're capable of impacting positively and when you need help. And when you need help, Go get it. Don't skimp on it. And when you bring that help in, if you make a key hire, you bring on a partner, you bring on an investor, I think I said let them cook, but what I mean more proactively is if you bring somebody in for a purpose, you have to trust them. If you don't trust them to do their job, you shouldn't partner with them, you shouldn't hire them. So if there is a specificity of knowledge you require, go out, get it, let them do their thing, let them be a partner, engage with one another. Our attorney, I literally text him 3 times a week. Sometimes it's about law stuff, sometimes it isn't. He's somebody that I trust, and he covers things and is good at things that I'm not good at, and I am very well aware of what I'm not good at. So just kind of know yourself, trust the people that you work with.
Well, thank you. Well, on behalf of everyone, we just really want to thank you for the insights.
Awesome. We're going to do a quick Q&A. Anyone on this side have any questions? Awesome.
Hi, my name is Apu, and we are a bootstrap company. Maybe it may not be common in that space, but the question is, I have 2 questions, one for Eden and one for Will. So let me ask the first question to Eden. So we are a company, we've been pushing from a double-digit to like a triple-digit kind of million kind of revenue scale. So we have quite a few partners from different angle, be a reseller, be a tech partners, be other kind of multiple different partner layer. So we always used to, it is a quite simple saying, if you're going to be bringing your in-house attorney, that's a kind of dead deal. That's not going to happen. That's a kind of common situation which is really happening in our end. So the reason is like sometime these partners who's going to be especially big enough, they used to be in a situation where if you're going to be, they would be asking us to sign their terms rather they say signing our terms, number one. Number two, what's your opinion on that part? Second one, let's say you do have a partner, kind of like a legal partner who is pretty strong enough in a specific country, where, but at the same time you have like a partner in that particular country, where the legal partner is pretty confident that yes, we can go and fight on that particular country in case needed. You go ahead and sign it. What would you do in my position in signing that contract? Would you be signing that contract in that particular country for, I mean, all good, all the terms are perfectly fine, aligned, but the only thing is they really don't want to sign in this particular jurisdiction, so.
And the second question you're talking about, you said it's a partner, like a vendor or a third party kind of
It's
company?
mostly like, it depends on the situation, mostly it's going to be like a vendor, or it's going to be, not exactly like a vendor, but more of like a reseller, or maybe like a, so if you're going to sign the deal with that particular partner, that's going to be like a future revenue from that particular region, or maybe from that particular segment and things like that.
And the question there is like, it's very specific to that country. Is it a
It's just a jurisdiction, that's the only thing what they're concerned on. But we do have legal partner who can really be, need to be handled in that particular location, that's there. But would you be signing if you're in my shoes?
So I'll go to the first question. The first question is a common problem, and I mentioned this before, when you don't have much leverage, right, and you have your own paper, and you want them to sign your paper, it's easier, it's better, but they won't do it, or they'll just shove theirs in front of you. What do you do? Is that kind of the question there? Yeah, it's a real problem, and most of the time you're going to be stuck with what they give you until you're a bigger player, right? And so as the lawyer, I hate that, and I'm always frustrated by it too, but I understand it has to happen. So what I would do in that situation is I'd look at what they give you, and I'm looking for what are the most important, like 5 things or less that I would want to change about this document, so that the negotiation is quick and easy and I'm not delaying the deal too much. And I'm giving up on a lot of things I wish I could change. And then I speak directly with their lawyer or their business person right away to say, I'm not sending them the edits or anything. I'm literally just saying, here's the things that I'm concerned about. Can you change them? Most of the time that works, especially because they appreciate that you didn't push that hard. And it gets it done pretty quickly. And then it goes back to the point we had before about how do you manage all these different contracts now, because it's not your contract and every single one of these looks different. That's where you need to have some sort of system, even if it's kind of like bootstrapping with a spreadsheet and you don't have a system or tool. Yeah. Yeah. Right, and then agreeing to the jurisdiction, that part about like what governs Yeah, that's another really tough one. I mean, again, you don't have much leverage there. And sometimes I found that our business and I am forced to agree to a jurisdiction that just makes no sense for us, and it's weird. And it has some risk involved. You can try to negotiate around that if it's really critical, but you're going to usually lose that point. And that's just something you have to live with. And then you may have a whole stack of contracts over time with different jurisdictional rules or governance that you're going to have to live with. And that is part of like the pain of a new growing business.
Awesome. Yeah. Any other questions? Cool. We'll do this last one, and then we'll bring up the high school students.
Thank you. Oh, great talk, guys. I'm Samant. I'm a product manager at Gordian Software, YCW 19. And my question's for Will. I'm a product person, and my CFO always talks about capital allocation. And we recently raised our Series A. We had one product that's working, and now we're exploring to create our second product. What are the factors or things that you look in to continue allocating capital to a project, or killing it, or sort of giving it more life to maintain?
It's funny because I was actually texting with my old VP of product, like as I was sitting on that couch. So people think that product teams and finance teams don't work tightly together, but that's actually not true. Because for you to, essentially take a risk, assuming that you've allocated the dollars, time, and effort towards discovery, you have the supporting engineering capability to support it. Again, it's from what that person's going to be asking is, what does it cost in terms of time, delayed focus, and what's the market opportunity this is here? Is this something that's actually going to recoup this capital? Is it going to be additive? I think what I said earlier is like, be good at one thing and then move adjacent. To what degree does that overlap with your existing customer network? Can you monetize that effectively? It's a really, really scary thing, product is, because it's not hard numbers, and that's what I like. It's something that you can know to a degree, and that's not where this is. It's a lot of customer conversations, user feedback, but again, it's important that you guys maintain that connection so that he can think, or he or she can think like you, and that, so you can think like them. My company recently, we're spinning down a product right now that, in terms of the discovery that was done from the product manager, it's an incredibly loud problem. We see it in trade publications. Our users talk about it all the time. And we're like, this is an absolute, this is a no-brainer. When in fact, it's a need, it's a solid, opportunity, but in terms of the market, it's not really a big problem money-wise. And the hard thing with any early stage company is it's hard to find an idea and be like, that's a bad idea. Everything creates a little bit of value. You just have to create, focus on the things that create the biggest impact the fastest. And so again, that's a space where it's really important to have those relationships with that team and collaborate very effectively.
Thank you. Awesome. Give it a round of applause for the panel.